If you have no credit history in the United States, you are completely invisible to the financial system. You're functionally erased from the map. This invisibility carries real daily costs. Without a credit profile, you face automatic, instant denials for auto loans and mortgages. Even basic apartment leases will be rejected before a human ever looks at your application. But there is a concrete roadmap out. By following a specific mathematical process, you can build your credit score from absolute 0 to over 700 in 6 to 12 months. We are going to cover all 5 steps, but pay close attention to step 4. This method allows you to leverage an existing credit history to bypass the traditional waiting period required by most banks. Your credit score represents your primary access point to the modern economy. It dictates the terms of your financial life, from the interest rate on your car to the cost of your insurance. Before we build, we need to define the target. A credit score is a scale from 300 to 850. It mathematically signals your trustworthiness to lenders. The higher your score, the less risky you appear. The algorithm calculates your score like this. Payment history carries the most weight at 35%. Credit utilization is right behind it at 30%. Length of history is 15%. Credit mix is 10%, and new inquiries make up the final 10%. To execute this blueprint, you need 3 prerequisites: a basic bank account, verified identity documents, and some starting capital. Step 1 is establishing your foundation by opening a secured credit card. If you apply for a regular credit card with 0 history, the computer system will automatically reject you. A secured card bypasses that automated rejection. This balance scale demonstrates the mechanics. To open a secured card, you provide a cash deposit. If you put down $200, your credit limit is exactly $200. If you deposit $500, your limit is $500. Institutions like Discover, Capital One, and Chime offer beginner-friendly secured cards specifically designed for applicants starting from 0. By using your own cash as collateral, you force the financial system to register your existence. You write yourself onto the credit map without waiting for a bank to give you permission. Step 2 is consistency. The day your secured card arrives, set up automated, on-time payments for at least the minimum amount. This graph illustrates the stakes. Because payment history controls 35% of your score, missing a single due date will cause your newly formed profile to plunge by 60 to 100 points immediately. Automation prevents human error. Step 3 manages your credit utilization. This is the strict percentage of your total available credit limit that you are actively spending at any given time. On a $1,000 progress bar, an $800 balance is 80% utilization. The algorithm penalizes this heavily. To avoid penalties, keep balances under 30%, below $300. For an elite-level score, restrict spending to under 10%, keeping balances strictly below $100. By locking in automated payments and restricting your card to micro-purchases, you strip away the risk. You transform a standard credit card into a passive score-building engine. Step 4 is the accelerator. Find a trusted family member with a pristine credit history and ask them to add you as an authorized user on their oldest credit card. As an authorized user, the credit bureaus legally import the primary user's years of established on-time history directly onto your completely blank profile. Watch how this data connects. By the very next statement cycle, that long, positive history hits your report. This single action can boost a beginner score by 50 to 100 points almost instantly. Step 5 is tracking. Now that you have an active, growing profile, you must set up free credit monitoring to protect it. Using a tracking dashboard like this on apps like Credit Karma or Experian allows you to hunt down hidden reporting errors. Lenders make mistakes, and those errors will artificially suppress your score until you dispute them. Leveraging a family member's financial trust combined with vigilant error tracking provides a massive advantage. It systematically slashes years off the traditional credit building timeline. To summarize your blueprint, get a secured card, put your minimum payments on autopay, keep your utilization tightly under 10%, become an authorized user, and monitor your score for errors. Executing these 5 steps exactly as laid out leads to a predictable outcome, a 700+ score within a year. Drop your current credit score situation in the comments below. I read every single one. And if this blueprint helped you, hit subscribe to Focus Plan Succeed for more weekly financial breakdowns. A high credit score is the mathematical result of these specific, repeatable actions. By following this blueprint, that score is the inevitable conclusion. See you in the next video.